Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, this is Anthony Wolfenden. Welcome to Wealth Coffee Chats. I'm a tax financial advisor, and I wanted to do a quick update today on changes to what was going to be one of Australia's first wealth taxes. This was the tax on superannuation that the Treasury had proposed back in 2023, where if you had a balance over $3 million, the government would like to take 30% of unrealized capital gains retroactively and unindexed. That policy has been raised in 2023. Legislation was actually written, not very well written, and went to Parliament, where it was defeated in the Senate, the crossbench. And the Treasurer has tried a couple of times to bring that policy back and has insisted until recently on sticking to it and has received all sorts of flack. The three things that were really not very good about it was, first, it was a wealth tax. I want to come back to that. Second is it was retroactive prior to the date that the legislation would actually come into force. So that made it very difficult for people to know, they had to act early, basically, before the legislation came through. And unlike most other things in superannuation, it was not indexed to go up as all of the other sort of basic measures in super are. Well, the industry and the consumer has given consistent feedback that that is just not on. And indeed, the Treasurer has responded, Jim Chalmers, by changing his mind. This is against the advice of Treasury. That's the Department of Civil Servants that the Treasurer heads up. These are people who are career-based. They don't change with government. And what they see coming through is the fact that income taxes will no longer be able to cover the country and our increased expenditure as incomes and salaries and wages and people's jobs go away, I guess. And so there is an acknowledgement within Treasury that we'll have to move to a wealth-based tax base at some point. It looks like that won't be today. So the Treasurer has announced this week that the tax on superannuation is not a thing of the past. They're actually going to introduce legislation modified, but they're going to change the three crucial things that were not seen as very good. The first thing is the effect will take place after the legislation is written and approved and passed and put into force. The second thing, the $3 million 30% tax threshold will be indexed along with all of the other transfer balance caps and concessional contribution limits and so forth and so on, so that over time, as the power of the dollar declines, the value at which the tax is imposed will go up. And I guess thirdly, they've indicated that it will fall back to being an income tax, capital gains and income tax on valuation, but the valuations will have to be realized first before the tax is imposed. Now, that's going to have an impact on the, I guess, the level of income that the tax generates. In the first 10 years, I think it looks like it's going to drop from 2.5 billion was one of the numbers I saw to 2. And so the Treasurer has introduced a further threshold at $10 million where an income and capital gains tax of 40% will be imposed. That's quite extraordinary. Top corporate rates are at 30%. Individual rates top out at 47%. So this is quite a high tax. Clearly, the intent is to discourage anyone growing their super balance beyond 3 and certainly beyond 10. And so it's basically putting a wealth cap or a reasonable amount on what an individual can accumulate in super and have tax beneficial status on before the taxes become absurd. So a lot of incentive to have balances up to 3, and then a lot of incentive not to have balances beyond 3. So we'll see where this goes. This is the proposal this week. Basically, the Treasurer has gone against Treasury, the Department of Public Servants that he heads up, who understand that at some point the government's going to have to stop taxing income and look at other taxes. But certainly this government doesn't look like, at least in this term, it will be the first one to do so. So important updates. I don't know what else we need to say, really. It's going to impact certainly some people, but thankfully it won't impact our kids to the same degree it might have otherwise because they're going to index it. So there you go. That's the Wealth Coffee Chat for today.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.